Also here, we got to talk about the Oracle of Omaha. Warren Buffett released his annual letter to Berkshire Hathaway shareholders saying, quote, in 2024, Berkshire did better than I expected, though 53% of their 189 operating businesses reported a decline in earnings. Berkshire's cash holdings came in at just over $334 billion, nearly double the $167.6 billion reported in 2023. Joining us now to break down the biggest takeaways from the letter, we've got Cathy Seifert, CFRA Research, VP of Equity Research. Cathy, great to have you back on the program with us. Why is Buffett sitting on such a major cash pile here?
Well, I think we can glean a couple of messages from that annual, the annual report. And, he's sitting on cash because he doesn't think he has a good alternative to deploy it. Coupled with the fact that Treasury yields ticked back up. One of the reasons that Berkshire's numbers outperformed my estimates, which were like 10% above the consensus, was that investment income was significantly better than people were expecting. And insurance, the personal lines insurance turned around. So, the bar with Treasury yields where they are, the bar to look for alternatives is higher. And then, combined with the fact that equity valuations are certainly not where a value investor like Warren Buffett would like them to be. I think it's no coincidence that he's focusing on his Japan investments. I mean, he made those 5 years ago. I think he's, if he does a deal, he may look abroad where valuations might be a little more attractive.
Cathy, talk to me a little bit more about that and kind of what you think the line of thinking there, just given the fact that he says that there is still a dearth of opportunities here in the U.S.
I'm sorry. In terms of what specifically? The landscape for acquisitions?
Yeah, if you were to put some of this money to work, I think the big question for investors is what is it going to take to get them off the sidelines? What it's going to take to get them excited about that next investment? What do you think his line of thinking is?
I mean, my sense is he's thinking that the economy in 2025, there's a lot of uncertainty. And I think there are a lot of people who share that view. I mean, the macro picture, the geopolitical picture has a lot of uncertainty, makes it very difficult to plan. And you've got equity valuations that, quite frankly, I think there are a number of us in this business that are a little surprised at how well they've held up, given all the risk, largely, stemming out of some of the actions in Washington. The other thing with Berkshire, too, though, to remember is 2025, they are going to be paying out at least $1.3 billion in wildfire claims. I think a lot of that's going to come from their reinsurance business. That number could grow. They have historically made estimates that end up being, lifted upward. But, if you look at typically where Buffett tends to make his outright purchases, he tends to have an equity portfolio barbelled between technology and financial, and that's barbelled largely because of the Apple position. And so his outright investments tend to be in energy, utility, consumer staples, insurance. I mean, I wouldn't be surprised if he decides to add on to some of his insurance franchises potentially. But if you look at the other areas where he tends to go into, the outlook is pretty uncertain. So it'll probably pay for him to wait. Historically, it has, and that's probably going to play out similarly this year.
And Cathy, just talking big picture here, because I think that's what a lot of investors like to glean from this, some of his commentary. What does it ultimately tell us just about market conditions then in the new year, and maybe what some of that volatility could potentially look like?
I think a lot of the volatility or how things are going to play out will really depend on the degree to which mass deportations ratchet up inflation, tariffs ratchet up inflation. And, Berkshire's biggest business is in insurance and reinsurance. And both of those policies are inflationary to the insurance business. So his core operating businesses are, sort of staring down the barrel of a gun with potential threats to your operating margins. So, and then there's geopolitical risk. I think against that backdrop, he's probably going to stand pat, and, coupled with the fact that he's being paid to wait.
All right, Cathy, always great to get your insights. Thanks so much for taking the time to join us here today.
Thanks.